Hi everyone, welcome to my YouTube channel. My name is Tabitha. If you're new to this channel, please welcome. If you are, if you haven't subscribed yet, please subscribe. Today we are going to talk about general journals, and general journals are very important in bookkeeping, accounting. So this is where you drive the information to prepare your trial balance and all your financial statement so you can end the accounting period. So general journals, you get the information from the journals. So this is how it works. So you make a transaction and you record journals, and from the journals you take the information, bring it to general ledgers, and then find the final number of that journal, of that general ledgers, and then that amount will now go to your trial balance and then goes to your financial statement, like balance sheet or income statement. So that is how it works, from journals to from transaction to journals to general ledgers. So general ledger is composed of separate accounts for each. So this means you have accounts for assets, you also have account for liabilities, you have account for capital, you have account for expenses, you have account for revenues. All these accounts are separate. Let's say, for example, you have account receivable general journals. So all the account receivable that you had documented that month, they will go under that account general ledgers, account receivable. The same thing too for the cash. The same thing too for liabilities. You have separate accounts for each account. Is it cash? You have separate one. But these accounts could be like from generals, general like bank statement, all those stuff, or from the purchases, or they could be from sales. It could be cash receipt, cash disbursement, and or payroll. So all these accounts could be made up of anything. So now let's look at how to post on your general ledgers. So after, before you post, you have that balance forward. This could be from last month or from the last 3 months, depending on when your company create their statements. So, and then after that, you can now go back to your journals, because now you're creating a general ledgers for banks. So you can go back to your journals now and then check. So the first journal is CR or 1, which means is a journal called cash receipts. Cash receipts, and is number 10. So when you go there, you will get a balance of 14,200.66, and this is a debit balance. So when you bring it back there, bring it here, you will add that amount to the balance forward. If you add the amount to the balance forward, this is the final amount that you will get for as a debit. So you get this amount and it's a debit. Again, within that same time, the same accounting period, the company also had decided to pay the creditors, pay the suppliers, pay their bills, anything that was taking the money out. So, and in that you had this journals called CD03. So if you go to that journals, and then you will find the balance of 28,556.33 for 0.73. So, and it's credit amount. So the amount that you're taking from that journal is credit. When you bring it here, because it's a credit and this is a debit, you will subtract. If you find the difference between the total amount of two credit, like the cash that you already add to the balance forward, and the cash that is going out, which was CD, cash disbursement, which is 28,556.73. So this is the cash that is going out, the one that is leaving your company, the one that is used for paying bill, the one that was used for paying creditors. So if something is leaving your company, it's not part of the company, right? So the cash that would be left will be 179.93, because this is the amount of cash the company have, and this is the amount of cash that they have paid out in terms of bills and creditors, suppliers. So they have paid that one out. So the difference now is 179.93, and because it's positive, this is a positive number, it will remain as debit. So the cash that your company have for the end of the month, this month, is 179.93. So now when they start the accounting period for next time, this will be the balance forward when you are trying to do general ledgers under the name banks. So this amount will be written as balance forward, and then you will start recording to get the final cash, final banks for that month. So this is the end of the video, guys, and I hope you guys enjoy. And if you haven't subscribed yet, so please subscribe, and I will see you next time.